welcome back to another explainer. Today, we're dissecting a totally fascinating, high-stakes concept derived directly from episode 6 of Zigmaverse. We're looking at the ultimate separator between the traders who actually thrive and the ones who just burn out. The power of patience in trading. If you're looking to refine your edge in the markets and really master the mental game, well, you are in the exact right place.
Let's kick things off with a massive question. What is literally the hardest part of trading? It's a fantastic hook, right? Now, you might immediately think it's predicting the next sudden market crash, or maybe finding that perfect mathematical indicator that finally unlocks the matrix for you. But our source material points us in a completely different, much more internal direction. The true difficulty actually lies in the relentless conflict between the absolute, unpredictable chaos of the markets and the desperate need for your own internal emotional control.
Section 1. The Trading Landscape.
Okay, let's dive into this. To really grasp the psychological warfare at play here, we first have to look at the highly volatile arenas where these principles are applied. The source highlights several incredibly fast-paced environments. We're talking about the 24/7 liquidity machine of cryptocurrency markets, traditional futures trading, and advanced trading methodologies like IOTC and complex Harman setups. You already know these are unforgiving environments where variables change by the millisecond. A Harman setup, for example, might take days to perfectly align its geometric ratios, only to be invalidated in a split second. But here's the absolute crucial takeaway from Zigmaverse. Regardless of whether you're trading crypto on a weekend or running advanced future strategies during New York hours, the foundational rules of survival are identical. The landscape changes, sure, but the core psychological requirements for you, the trader, they absolutely do not.
Section 2. Technical versus fundamental analysis.
So, let's look at how our primary analytical frameworks fit into this ecosystem. You're likely already intimately familiar with technical analysis, scrutinizing price patterns and market structure, as well as fundamental analysis, weighing intrinsic value against macroeconomic news and data prints. Now, Zigmaverse frames these not as the ultimate secrets to trading, but honestly, just as the baseline entry fee. They're literally just the table stakes required to even sit down and play. Every single trade begins here because, obviously, you need data to find a logical entry point. But so many traders falsely believe that a better charting setup or a faster news feed is what's going to finally make them profitable. As the source points out, analysis is just step one of a much larger, much more demanding ecosystem.
Section 3. The necessity of management. Once you've completed your analysis and decided to actually put real capital on the line, you step into the real world of financial risk. So, the absolutely critical pivot point here is management. Think about it. You can have a Nobel Prize-winning harmonic wave analysis or the most pristine fundamental thesis on a crypto asset, but if you don't use strict management, one rogue tweet or sudden institutional liquidation is going to blow up your entire account. We're talking about militant risk management, overall portfolio exposure, and carefully calculating your position sizing before the trade is even placed. It's the structural mathematical safety net that ensures a single bad trade or even a whole string of bad trades doesn't result in the complete risk of ruin.
Section 4. Mastering trading psychology. The source highlights something super fascinating right here. Trading psychology is defined as the mental state and emotional control required to navigate the market successfully. You can possess the most advanced technical edge on the planet, and you can write down the strictest risk management rules ever conceived in a pristine spreadsheet, but they are utterly useless without a rock-solid mindset to back them up when the market actually opens. Why? Because your mind is the actual execution engine of your entire strategy. If fear or greed hijacks your decision-making process while a trade is live, if your palms are sweating and your heart rate is just spiking, all those logical management rules you wrote down go right out the window.
We really need to deeply absorb this exact quote from the source. Stay calm in difficult situation. Now, it sounds like a pleasant cliche, doesn't it? But put yourself in the context of watching a highly leveraged futures trade start swinging violently against your position. In that exact moment, staying calm isn't just a motivational poster. It's a massive, hard-fought, necessary biological skill. It's the practiced ability to completely override your natural human panic response, to quiet the amygdala, and firmly stick to your predefined analytical plan. Whether that means taking the predefined stop-loss like a total professional, or holding the line because your thesis is actually still valid.
Section 5. The power of patience. This brings everything together. It all comes down to one single word: opportunity. The market is constantly moving, vibrating, generating just endless amounts of noise. In fact, Zigmaverse implies that the vast majority of what you see on a chart every single day is exactly that, just noise. But an actual high-probability opportunity, those are exceedingly rare.
The true agonizing test of a trader is having the raw discipline to sit on your hands and filter through all that noise. You literally must wait until the exact pristine setup you've defined in your technical and fundamental analysis finally appears clearly in front of you.
And when that perfect opportunity isn't there, you just wait. It sounds incredibly simple, but as the source points out, fighting the human urge to do something is agonizing. It's physical torture to sit there in cash while a crypto chart goes completely parabolic, and everyone else on your timeline seems to be making money. But you don't force a trade, you don't chase a massive green candle out of boredom, and you absolutely never jump in out of the fear of missing out. You master your psychology, you protect your capital, and you simply wait for the market to come to you, strictly on your own terms.
So what does this all mean in practice? And this brilliantly illustrates the complete life cycle of a professional trade, following these 4 steps. We begin at step 1, technical and fundamental analysis, where we define our edge and stalk our prey. Then, step 2 is management, establishing our safety parameters, our position sizing, and calculating our exact risk. Step 3, which is quite honestly the most grueling phase of the entire process, just wait for the trigger to execute. And finally, step 4, the final outcome. The outcome is entirely dependent on correctly executing those previous 3 steps, with patience acting as the essential, unshakable bridge between your initial analysis and your final execution.
To wrap up this explainer, I want to leave you with a critical question to evaluate your own screen time. Are you truly waiting for the right opportunity, or are you just reacting to the noise? If you find yourself constantly in trades, battling anxiety and revenge trading after a tough loss, it's highly likely you need to revisit this foundational psychological pillar. Master your patience, and you will master the market. Thanks so much for joining me as we unpack these insights, and I'll catch you on the next explainer.